What is up, everyone, and welcome to another Bitcoin market update. In these videos, you'll learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin, Ethereum, and others. Before we dive into the analysis, just a quick reminder that everything on this channel is for educational purposes only and is not intended as financial advice. All right, so starting off with Bitcoin in the monthly time frame, one thing I want to point out here is really just the equilibrium pattern that we have potentially playing out here, which I think is very likely for us to form. And an equilibrium pattern, if you're not familiar with this, is really just when the price tightens up, where you get a high, you come down, you get a low, you come up again, you form a lower high in comparison to the previous high here, you come down again, you form a lower higher low, and really it's just a series of higher lows and lower highs until eventually this thing breaks out either to the upside or to the downside. And whatever way it does end up breaking out, because it's contracting so much during that tightening period, you're going to get a lot of momentum in the direction that it goes. So if this monthly equilibrium ends up breaking to the downside, we're going to get several months of downside. Conversely, if it breaks to the upside, we're going to get several months of upside as well. So we need to consider that when we're looking at the higher time frames and looking at the lower time frames as well, because that gives us our high time frame bias that we can then use to extrapolate to those lower time frames. So right now, this monthly candle is going to close in about 14 days. And I've said on this rise in price that we're seeing right here, it's very likely we're going to set a lower high below this high right here. And the reason is just because of the magnitude of the move, which I've talked about in past videos. We drew down about 55%. So for us to go above, we would need to go above about 127% on the first push, which I think is very unlikely. It's possible, clearly it's possible, but it's unlikely. So if we know that on the monthly time frame we're going to be looking for a potential lower high, we need to think on the lower time frames below the monthly, we need to be thinking about potentially looking to go short. So let's go down to the lower time frames and look at what we have going on there from a weekly perspective. So on a weekly time frame, right now we have set our high right here. And this was right after we had about 7 weeks of upside without coming down at least once. So this was very healthy for us. And it's important to keep that in mind as we look for this trend to potentially continue to the upside. So when you have a rise like this, where you rise over 70% off of a low before even coming down and forming a high right here, you need to consider that this is a pretty strong trend. So for this to continue is pretty likely. And the reason is, this high, well, it's really dependent on where the higher low is set if the trend continues. If we continue to draw down before forming our higher low and we get down to maybe this blue zone before we bounce, then it's going to be unlikely for, on the first test at least, we're going to go up and make a higher high. It's more likely that if we come down to somewhere like here, we're going to bounce, but we're not going to get all the way up to this previous high. We're going to get to, maybe right here, and then we're going to come down again. So what we're looking for is to potentially form the high right here where we are now. And if we do, then we're pretty close to our previous high, so we do have a decent chance of being able to go up and break to a new higher high on the first go. So I'll be looking to see where this weekly candle closes in the next 3 days. If we go down and we break to a new low below this 42.7 low, or if we come and we really just stay inside of this previous candle's trading range and form a inside bar. From a pivot's perspective, you can see we're kind of bouncing off of this R2 pivot after closing above it. We're kind of using it as support here. So we'll see if that continues to hold with a weekly close either above or below that level. If we go down to the the 2-day time frame, one thing I want to point out here is this key gray level right here. So if we look at this gray level, this is from our bull trend right here where we had a low, high, higher low, and then higher high. It's a very simple 4-step pattern. You're looking for a low to be set, and the way we know a low is set is when we come down, we have a wick of a candle, and then the high of a candle is broken. So in this case, you can see that if we zoom in here, we can see the high of this white candle got broken by this candle right here, which makes the low right here on the white candle the low. So we come down, we form a low right here, we bounce, and then for a high to be set, we need to break the low of that of the candle, and that's what we break right here with this wick. So now we have a low, high, and now we need a higher low. And so same thing we're looking for a low is the high of the candle to be broken, and that's what we see right here. We come down, we bounce right here, and then we come up and we break this candle's high right here, and that gives us our higher high. So now we have a low, high, higher low, higher high above this key high right here, and 2 candle closes above this key high. So that makes the last down candle before this up move, the area where people were selling their Bitcoin in this case, the area for potential support on a retest. So we wait to see if we get support, but instead of getting support, we push right through this and close below it. So now this is resistance for price. So now that's what we're kind of seeing here. We come into it, but you can see that price is starting to reject off of this level right now. And I do think that in the coming days, it is there is a decent probability that this will come down to try and form a higher low, somewhere above this previous low that we set here at about 42.7. We bounced pretty significantly as well, so because we've bounced pretty significantly, it's likely that we're going to form a higher low on the 2-day time frame, somewhere above that low. So what the bulls want to see is the bulls want to see us come down, form a higher low, somewhere above this previous low, and then come up and break through this resistance level and form a higher high. So that's what we'll be looking for. One other thing I wanted to point out on this time frame was the SuperGuppy Indicator. And if you don't know how to use the SuperGuppy Indicator, check out our video tutorial that we just actually released yesterday on how to use this indicator. It's very simple to use, and you can see right here it paid off once again with a bounce off of these green EMAs right here in this zone. So you can see these investor EMAs or the longer term EMAs held up as support right here. And if you were to buy in on any of, anywhere in this green range, let's say you took it even from the top, that was still about a 7+% profit potential there. If you got in lower, near the lows here, that was over 12%. So these are typically a very strong indication of where the price is going to bounce or reject off of, in this case bounce, and you see that with these longer lower wicks, and then we get this nice bounce right here. So that trend may continue, and when we come down again, we'll likely try and form a higher low somewhere on the tip of these green EMAs, and these will keep continuing to go up if the price continues higher, and these are carrying the price up as well. So if we go down to the 6-hour time frame real quick, and we'll wrap this video up, this is really our main support level right now, and this is from, once again, just a simple bull trend here. So we have a low, high, from this black candle, higher low, and then higher high. So once we get the higher high with 2 candle closes above this key high, then we know this black candle is our support level, and you can see that we get a nice bounce here, as well as potentially getting another bounce here. So this is going to be the level that if we end up closing 2 candlesticks below it, it will likely be resistance for potential short, going down to try and form that daily higher low that we just talked about. So one other thing I wanted to point out real quick was the single day time frame. From a single day perspective, one thing I wanted to note was the Ichimoku Cloud. So the Ichimoku Cloud is continuing to set up for the most bullish setup that it has, which is when the cloud is green, the Tenkin, the blue line, and the Kijun, the red line, are above the cloud, and the price is above all of those. So above the Tenkin and the Kijun as well as the cloud. Once we get into that scenario, that's going to be an area where I'm going to look to go potentially long. And the reason for that is because this is a very strong trend indicator, the Ichimoku Cloud. So when we're in the most bullish scenario, here's an example of us going into the most bullish scenario right here. So you can see that as soon as the Tenkin, the blue line, crosses above the red, here's your potential entry point right here. So back on October 17th. And then you can see that once we go into this strong trend, this trend following indicator, that Ichimoku Cloud, provides us with buying opportunities the whole way up. So we'd be riding the trend up this whole way. We're still in the trade, we're still in the trade, we're still in the trade. Here's a potential area to add to our position, the Kijun, the red line. So we can add here, we can add here. We continue the trend up, bullish, bullish, bullish. Here's another opportunity to add here. We continue the trend up some more. We continue up some more. And then eventually here's another opportunity to add. We get a small bounce, and then we get a candle close below the Kijun. Now that's going to be your area where you're going to look to close the trade. So if you get a candle close below that Kijun, that's where you exit the trade. And so you see the profit potential that was there, all the way from October 17th back here in this range, all the way up to right here on April 21st. So if we start getting that same sort of scenario here, this is going to be an area where we could potentially see this go to some new all-time highs over time if we start to see a nice strong bull trend like this. So that's what I'm going to be watching for on this Ichimoku Cloud indicator. I hope this video was helpful for you. If you like this video, please give it a like down below and subscribe for future educational content around cryptocurrency and blockchain technology. And if you haven't already, check out our global Telegram channel. There's a link for that in the description below. You can join people from over 15 different countries where every Sunday we discuss a variety of cryptocurrency related topics and talk about different areas for potentially seeing some alpha returns in some of these different decentralized applications and otherwise. And we do that over Zoom, and you can be a part of that for free by joining in the link in the description below. We hope to see you in there. And until next time, onward and upward.